Good morning and welcome to Market Wake Up. One of these days, John, I'm going to have to get you to do this intro. I'm just, I always never know what to say. I know, I just click go live and we're back. But we're back, guys. Welcome back. My name's Jordan. This is John, and we're going to get you up to date with everything you need to know ahead of your trading day. We break down the macro mumbo jumbo, so all you have to do is worry about trading. Without further ado, John, I've got a good one today, a good investigative journalistic piece that we can dive in. It's a classic Friday piece. Happy Friday, everyone. Tell us where you're tuning in from, and let's get into Market Wake Up. Good morning. Good morning. How you doing, John?
I'm doing really well, mate. How are you? How's your afternoon?
I'm good. It's a Friday afternoon. It's a bit warm.
You popped the brewski yet?
Not yet, but I tell you now, John, I'm hanging for it. All right, it's 3:30 p.m. The sun is out, and I'm sitting here. I can feel them calling me from the bridge. See, I'm already thinking about it. But no, I haven't yet. I am looking forward to getting to the weekend, though, so I'm put your feet up. The weather's not too hot. I've got English weather this weekend, so I'm not sure that's going to match my party atmosphere. But other than that, no, I'm doing well. What's anything caught your eye this morning, John?
Yeah. I mean, obviously, retail sales in the UK, pretty good. Well, I say good. Was down, but beat expectations. So I think the expectations had it dropping off a cliff. And that wasn't to be the case. So that's very interesting. I'm actually just reading something about the Hang Seng as it's had a little rebound. I had an alert on the Hang Seng for a little bit of a opportunity to the upside, but it's missed my alert by, I would say, in the UK, a Nats Naka. I don't know if you say that.
A Nats Naka.
Don't know if you say that in Australia or not, because all your bugs are like this. So
that will knock you out.
It could be like that. It could be like that. But for us, it's very, very small. So yeah, there was interesting. I'm just reading a headline actually saying that new easing measures have been announced. I don't know if you've seen any of this today.
No.
So yeah, just kind of reading off the website I'm looking at here. It just says the PBOC tonight announced new easing measures, which included further rate cuts and stock buyback funding. Moreover, we've got some positive economic data with retail sales and industrial production beating expectations by a big margin. And I have seen that this morning. Industrial production year on year up to 5.4%, retail sales year on year up to 3.2%. So there's quite some substantial jumps there for China.
Yeah, bit of growth in fixed asset investments as well. Unemployment rate down, ticking by 2.2% too. So some good news. Still waiting on stimulus. I was reading a report from a Chinese economist actually the other day. Now, it's not very rare that you get someone from mainland China openly criticize, shall I say.
Are they still there?
That's why I'm saying it's not very common. But I was reading this report, an economist, and he blatantly and bludgeoningly says if the stimulus is anything less than 10 trillion won, forget about it.
Yeah, that makes a lot of sense, doesn't it?
And I think everyone's like,
yep.
Didn't
you say the other day that they're in debt by like 13 trillion as well?
US dollars. Not one. US
dollars, yeah. So.
Not in debt. It's just what they wiped off of the housing market. Which once again, if you guys missed that, the Chinese real estate market before the deleveraging was the single largest asset class in the world, like worth more than any other asset in the world. That was by far the largest asset class. But it's because they leveraged it to the tits, but regardless, it was the largest. They deleveraged it. It wiped $10 trillion off the market value. And that's kind of what started like, this turmoil that's kind of falling through. But yeah, so he's come out and said, look, this stimulus needs to be stimulus, and wholeheartedly wholeheartedly agree. Let's chat on the retail sales, the pound. 0.3% now. October, genuinely, now this is obviously released in October, but it's previous month's data. Genuinely a fall off in retail sales. Seasonally, I guess, if we want to chat about it, we do.
Yeah.
You're back in the back to school period. You got past the back to school period, so you don't have that spending. And one good way, here's a little tip for you, right? Here's actually, it's a really good one. If you ever want to know when the weakest point of retail sales data is, or retail sales in general, or where retail companies struggle, do you know where to look?
No.
For the big sales.
Big sales, big ticket sales.
Big sales. I'm talking Amazon Prime Day. Yeah. I'm talking Black Friday. Yeah. Right. These have been created for one reason and one reason only: to boost retail sales during slow periods. Right.
Makes a lot of sense. Yeah.
As far as it goes. It's as far as it goes. It's to boost retail sales during that period.
And I imagine anyway they would feel a similar tightening anyway, right? In those kind of leading up to sort of holiday periods, people will tend to go on and buy certain things, coming into those types of areas. You might buy I was about to say, you might buy a Lilo off Amazon to go to the swimming pool, but not over here.
Lilo.
A Lilo.
Wow. Haven't heard that in a long
might just buy random stuff to go out in the summer, or in the winters come in, you might buy some gloves and X, Y, and Z.
Yeah, I think a lot of people go into that hibernation out of winter anyway. Once the kids are back at school and you've come out of the summer period, there's only one thing most parents are thinking of, and it's shit, Christmas is coming.
Yeah.
And you see a little bit of crumbs into Christmas spending as we move into October and November, right? Because these sales and people like to capitalize on them. But you do get like this lull. Which is why this retail sales data is so surprising, because it's smashed not only expectations, but it actually shown growth as well during a period like this, which is just so, I'm not going to say like uncommon, like it's happened before, but it's just so not expected given the current economic climate.
Yeah, that's true. That's true. I mean, pound did start to have a little bit of a fall off, didn't it, because of the inflation data. I still feel like that, it's what's the saying? Sell the rumor, buy the news sort of situation, isn't it? Because that inflation data came in, it was like, okay, well, we need to price in the eventuality of cuts now. I think the 2-year bond yields in the UK fell quite drastically as well. So there was an idea that we were going to see those kind of cuts coming in. How those have shaped up this morning, no idea. Probably send a little bit of a boost higher, I guess, if pounds up across the board.
Save it. Let me address that in the big bite. Let me address that in the big bite.
Save that.
Got a little bit to go into. Let's transition. Let's get over into our favorite thing of the day. Pressure squeeze. I'm lying. It's nowhere near our favorite, right? We prefer the big bite. The big bite's the favorite, right? But daily task. You should be warmed up by it now. Where's the VIX price?
Do you know what? You say that, but I need to start putting my little chart out again just to write down where these VIX prices are. I'm going to say
you learning, because you're going to learn. I'll get you 18.9. All right, you're going slow. I will get you in the know of the VIX because I'm going to tell you every morning.
Exactly.
I'm going to make you guess. Yeah. So every time you get it wrong, it's going to hurt a little bit, and you're going to make sure that you get closer and closer. You got 18.9. It's 19.2. 19.2 today. Damn. Sitting at 19. It is on the downside, but not where you want it. Not where you want it. Guys, if you are coming in chat, say good morning. Paul said good morning, but very quiet in here today. It's Friday. It's Friday. Everyone's gone, screw it. I'm not trading today. Yeah. But if you are in here, give us a wave. Say good day. Tune in. But yeah, VIX is up at 19.27 today. So still sitting in this range. Not really going anywhere. Edging ever so closely to that election, which is still uncalled for. We don't know which way that's going to go yet, which is really, really interesting. You ready for your rundown?
Do it.
Let's do it. All right. So Starting up with the Aussie dollar up 0.3% today. You mentioned some of that good news coming out of China. We did see a little impulse in strength for the Aussie dollar from that today. The euro is pretty much unchanged. The pound is up 0.35%. US dollar CAD unchanged. US dollar Japanese yen unchanged. The XJO is down 0.3%. The DAX is up 0.2%. The Nikkei is down 0.3%. The FTSE is down 0.13%. And the S&P 500 relatively unchanged. Good afternoon, Malcolm. Welcome in. It's good to see you, my friend. Coffee is down 1.3%. Gold's up 0.45%. Nat gas up 0.75%. Silver up just under 1%. Sugar up just up 0.6%. Oil relatively unchanged. Bitcoin up 0.85%. Ethereum up 1.1%. Bond yields relatively unchanged. Nothing really to know. Aussie 10-year yield finding a little bit of pace towards the upside. In the wild, good morning to you. I hope you're having a fantastic time. You've changed your profile picture, I have noticed, but I hope you're having a good day. There you go, John. There's you up to date with everything that's happening in the market so far. What do we have coming up today?
Not a lot. We don't have a lot coming up today. There is a... Oh, he's gone. Oh, I said there's nothing to do today, and he's gone. He's like, yeah, okay, right. I'm off here. I'm out. The weekend started.
I am here. My camera's just turned off. So carry on.
I hear you. So yeah, not really a lot coming up today. We've got the FOMC member Waller speaking a little bit later. You've also got some kind of building permits and things like that. But I guess sort of what we need to kind of build up to is, or what will kind of come out over the weekend. I know I've just read there about the potential cuts there from the PBOC, but you got the 1-year loan rate, 5-year loan prime rates coming out over the weekend as well. It'll be over the weekend for me, very early Monday morning. So it'll be about 2 a.m. for me, but that's George's afternoon or morning, I guess. So yeah, for me, that's something that's important to note, because we could see continue follow throughs of what we're seeing so far today if they do kind of add that stimulus there as well. So it could just give the Australian dollar a little bit more of a boost higher. This is something that was, we talked about this yesterday, and I found it quite interesting after stream. I was like, I wanted to go away and research it a little bit more, because the RBA are one of the only central banks that aren't doing anything right now. And if there is huge stimulus, what would that do? Yeah.
Stubborn.
Yes. Yeah. What would that do for the Australian dollar? That's really interesting me at the minute. Obviously, my feelings at the moment, I've been shorting. I'm not in any shorts on the Australian dollar at the moment, because everything kind of came into areas of support or whatnot. So there was no technical reason to be in them anymore. So yeah, for me, it was kind of like, okay, well, if they do put the stimulus in play, how is this going to impact Australia? And, I think we can obviously take a look at what's going on in sort of the iron ore sector and see how that's performing, because that has been on a little decline. I haven't actually looked at those iron ore prices today. I don't know whether we have seen any. Can you have a little look for me?
I can. It's the FB62, is it? No. Let me try and find the iron ore futures, because they're not easy to find on. There they are. They're not easy to find on TradingView. They're stabilizing at 105.
Yeah. I was looking. Yeah. So that's stabilizing. Copper's up a little bit today as well. So these are the sort of plays that you want to go with if China start adding sort of big stimulus. And I think if we do start to see upticks in these type of commodities, then that could obviously follow through into the likes of the Australian dollar as well. Just so that's going to be something to keep an eye on. That's where I'm going to be really watching. I think we're going to watch these commodity markets. If they start pumping, then maybe the hedge funds and whatnot will start buying back into the likes of the Australian dollar after they've reduced their positions. So actually, it's Friday. I don't know whether the data should have come out from actually it'd be this afternoon, wouldn't it? The COP report data. So I usually on a Friday evening have a little look at some of the COP reports just to see what the changes have been. So that's what I'm going to look at going into later tonight. Where's the hedge funds positioning themselves on the likes of the Australian dollar because of the impact the stimulus can have from China? So yeah, I think that was an interesting big bite we did the other day, or the conversation we had at least the other day around it.
It is a tough one. It's a tough one. Aussie dollar has internally a lot going for it, externally nothing going for it. And it's this battle between on the ground here, we're doing pretty good. We're doing pretty good. Everything else around the world, and because we're such a large exporter, that becomes a problem. If the rest of the world aren't performing, we aren't performing. And that's kind of the down low with the Aussie dollar, and it's a mixed sentiment. It is hard to get a read on if the stimulus doesn't come. I mean, you can see the way the money's flowing in the Aussie dollar, predominantly in the US dollar though. That I'd say that the biggest driver there is actually the US dollar. Andrew, late afternoon to you. Welcome in. I hope you're having a good Friday. Happy Friday to you, Andrew.
Yeah.
But I thoroughly enjoyed that. It was an interesting endeavor.
Yeah. Well, it was like a perfect storm. I talk about some kind of trading setups for me that are like really good ones, and one of them is when you've got two opposing sort of COT reports. You've got the big sort of extremes going on in the Australian dollar for a short, and then you've got the big extremes in the US dollar to buy dollars. So when you get those, that's another one of them chef kiss trading setups for me, and that's when I'm get really involved with a trade, and that's worked out pretty nicely so far. So we'll see how that positioning continues, because that's where I feel like I get my edge with the community trader reports. So yeah, I'll keep an eye on it.
Beautiful. Are you ready?
Yeah, should I get my notepad out?
Yeah, get your notepad out, because we're walking into the big bite.
Well, I don't actually have a pen here on my desktop.
Who has a notepad and not a pen?
Well, obviously I've been doing some rearranging, so it's not on the desk anymore. Joe, you know what? I'm gonna save this later. This goes onto YouTube. Cheers, mate. I think I might.
There you go.
Yes, thanks.
Yeah, you're welcome. Right, big bite today. You inspired me yesterday with your analysis. I thought I would add to it. Euro, Great British Pound. It's the chart I pulled up on screen. It's not going to look right to you, John. It's not, is it? That does not look like the Euro, Great British Pound chart. No, because I've inverted it.
Yeah,
I've inverted it. Right. So if you're on TradingView, if you come over here and right click and go to invert scale, essentially it's just going to flip it over. Now, most of this analysis I'm drawing today is more in the pound, and I want to buy the pound against the euro. Long story short, I want to buy the pound against the euro. When I'm talking in that language, I don't like having to do the flipping, and that means I need to short this, and then I got to short the euro against the pound. It just makes it much easier to just invert it and go, yep, I want to buy the pound against the euro, which is the inverted scale here, so I can align it with my bullish sentiment, right? I can convince myself more. Long story short, we've chat on how we feel about the euro. We have. To be honest, until recently, I didn't feel much more confident in the pound.
Right.
I still don't. But I think it's weighted. Now, what I mean by that is I feel like the euro's in the bin a lot more than the pound.
Right.
That to me gives opportunity. Now I can confirm that because, well, this price chart confirms that for me, that the rest of the world are also seeing that. So I've got a few different pieces of analysis that I want to kind of share on the euro pound, and I want to short it. Euro Great British Pound is the pair. I am looking to short it. I did want to short it before this level. Retail sales came out earlier today and it ripped straight through that level. I did all this analysis, loaded it back up, ready to go live, and it's ripped through the level. I was like, are you joking? I was hoping that this was going to be part. If anything, I was actually hoping retail sales data was going to give me an entry point if we went the other way, because I was expecting a slowdown seasonally, but it ripped through anyway. Long story short, there's last two times we were in here was 2020 down at these levels and 2022, right? Now, both of these are pretty significant. This change around we had here was pretty obvious. I think we all know what happened in 2020, right? COVID. This flip was rather large. I deem it uncredible. It wasn't, in my mind, relative to any interest rates at that current time. It wasn't relative to GDP at that current time of certain assets. It was, oh my God, what is happening? We don't know what's happening. Let's just buy and sell something and see what happens. And that's literally what COVID was. It was like, we don't know the scale of this. Let's just sell everything and see where it goes. So we got these changes. In 2022, we found this interesting area where the differential between the interest rates of the ECB and that of the Bank of England were separating. Now, they were separating in a way that meant the euro was becoming more likely to hike those interest rates compared to the pound, right? And then we saw this shift in sentiment and people take the euro higher. We're coming back into this level. Now, any technical trader will look at these levels and think, ooh, strong level on the daily, we can reject this.
Yeah.
But this time, I believe, and this is not financial advice, this is just my opinion and how I'm positioning my portfolio, that we're going to break this level. And the reason I think we're going to break this level is because I think the pound has hit a stagnation area, a spot where everyone's going, hold up, let's just slow up, hang on. We've got time to think about this. And the euro is still screaming. I'm going to share that why. Okay. First things first, I'm going to bring up the Great British Pound 2-year yield. You know I love these charts. The 2-year yield and the interest rate. You know I love these charts, John, right? What you can see here is your blue line on your chart of the 2-year government bond yields of the UK, the first to go. Interest rates follow. We know that. We have been below here, prolonged below here. Anytime we've prolonged had a 2-year yield below the interest rate, by the way, it has led to recession. Side note, but keep that in mind. Prolonged down. What we've seen recently is this bit of pop up. And this is kind of that attitude that I'm talking about there, where everyone in the UK, the Bank of England, have gone, oh, hang on a minute. Hang on. Yeah, okay. We cut 50 basis points. Was it 25? We cut 25 basis points. All right, we're down at 5%. Do we need to go any further yet? Well, hang on. Let's just have a think about this. And now the market still believes that, yes, eventually they will need to come down, but maybe not as quick. And we're seeing this kind of uptick of that 2-year yield get a little bit closer to that 5%. I find that really, really interesting. Now, if we look at the exact same chart, but for the euro, now for some reason, I don't know why, it won't allow me to pull in the ECB interest rate chart.
Oh.
Okay. I can do it on another chart. Just this specific one, it won't allow me. So I've added in from my good friends over at Trading Economics, the interest rate here. Just imagine this printed on top, and then this big 3.4% is where the current ECB rate is, right? So you can see it. The difference between what we're seeing here on the pound, the interest rate there getting closer to the actual interest rate, is while we're cutting and cutting and cutting at the ECB, we continue to fall off. We continue to fall off, right? So this is the markets now saying, hey, we got to come down. It's not, hey, let's think about this. It's no, we're coming down and we're coming down now. And what we've already been doing coming down isn't enough because they're still continuing to fall. Whereas the Great British Pound, the Bank of England, have done it once and the market's gone, oh, that might be enough.
Yeah.
And this is the difference in sentiment here. And this is what I want to capitalize on. The fact that the Great British Pound, the GB 2-year yields are heading in a upward. Don't get me wrong. This is still a downtrend, and they're still below the interest rate, so they're still forecasted to cut rates or hold rates, but nowhere near in the speed of what the ECB is printing. And I find that super, super interesting. So I even dove further. Well, I thought, John, let's really send everyone out of whack. Let's really get these technical traders just mind blown with how deep we go into charts. And I pulled in here the Great British 2-year yield minus the Great British interest rate and paired it against the ECB interest rate minus the EU 2-year yields. Okay.
Yeah, I love when you create these charts.
I went levels. Okay. So what this does, this is 0. Okay. If we're below 0, it means the market is forecasting cuts. If we're above 0, the market is forecasting rate hikes. Okay. Now you will see the correlations very, very, very similar. Mm-hmm. This here is why I deem 2020 a waste. because I don't think it's relative. They both did the same thing, and like the price action was just ridiculous. 2022, however, was very, very interesting. Okay, so you can see the visual difference that we kind of had here in 2022, late 2022. So I can see why the price action doesn't add up. But what I have found interesting is in times where these separate a lot, they do actually correlate with tops and bottoms in the market. And I found that really, really interesting. Now, we're not overly uncorrelating right now. If you're looking on the daily chart, we actually look pretty similar. But when you have a look into these without minusing the interest rates, right, the yields are changing massively.
Yeah.
And that's what I care about, not the overall figure, but the yields. When you add in the interest rate decisions, they're very similar. But we know the ECB is going to continue cutting because the market's telling them to. And we know the pound might sit still, or the Great Bank of England might sit still because the market's telling them to. And what I'm essentially looking at here is the difference between these. 2-year yield up to the 5% where it's at, it's a 93 basis point difference, 94 basis point difference. For the ECB, it's 125 basis point difference. Now we're talking, what was their last cut? 0.10? 10 basis points, 15 basis points. They did a
so they're at 3.65 right now, so they did a 25 basis points yesterday.
So remember when the Fed cut 50 basis points and everyone was like, I'm going to lose my mind, that's 50. The ECB, the market is pricing the ECB 125 basis points out of whack. That's what they're pricing, 125 basis points out of whack. That is weakness.
Yeah.
We talked about the Germany picture. Well, I did some more research. And you know what I found out, John? I was going to ask this question first, but I've messed it up. So I'm just going to throw it at you. Yeah. Germany are the second biggest holders of gold when it comes to countries in the world.
Oh, really? I did not know that. I did not know that. It's the US. The next one is Germany. Wow. And they've been offloading these past 2 years. They are offloading the gold. That makes a lot of sense.
Yep. Right. And that shows how they feel. They need the money. They're offloading their stockpile. Now, it's a big stockpile, and what they're offloading isn't like, they're not selling 50% of it, right? But they are cutting their storage, right? Who's buying? China, but that's another story, right? But it is super, super interesting to see, one, that Germany is one of the biggest, the second biggest gold holder in the world. I didn't know that. And two, but they're offloading, so their sentiment's not getting any sexier, right? They're looking for some kind of stimulus and selling their commodity positions so they can put that into the local economy. So, I've gone through this, the difference between, so this isn't me saying I'm necessarily bullish pound.
Yeah,
right.
You're bullish.
Andrew's saying, wouldn't Bank of England want to cut? I'm going to say this with a grain of salt, and nothing I ever say is financial advice. Okay, please always remember that. Just look at this chart and tell me whether the blue or the red line goes first, and then I'll let you read everything else. Just decide whether the blue or the red line goes first. Okay, the blue is the market, the red is the Bank of England. Draw your own conclusions. So whether they want to cut or not, they will. They will, because we're down 90 basis points on market. But that's not 125. And the current trend is closer to close that in from 90 basis points. So long story short, John, I want to short the euro, Great British pound. And I think conditions are met for us to break this level, and in an emphatic way.
Yeah. I like this. I think a lot of people, or I've seen a lot online at the moment about the downfall of the pound. And I think they're weighting it very heavily to Governor Bailey's comments about that they will go aggressive if they need to. But the thing is, if they need to, right? That's the big if, right? And it's also going to be based on the data that's coming out. So obviously inflation came out, it was down. If you look at core, not so much, but CPI year on year down. But we know oil prices have been falling, so that's probably had a big impact on what's gone on with the inflation picture. So you have to kind of, again, get that overall view of, okay, I mean, George, your chart there is just a perfect example of how you can get a visual aspect of what the market is looking at, right? You know, we do talk a lot about macro and whatnot, but we try and point out to the real sort of points that you really need to look at. You know, where do you need to put your eyes to see this physically, right? And the yields are a really good place to do that, and kind of comparing them to the rates. So you can just, in theory, you could look at these charts and be like, okay, well, I should build a watch list of these charts, and then, you know, take a look at them on a regular basis to see your positioning. But yeah, I completely agree with you. I think the market's, you know, the market's trying to price in this pound downfall, but is it really there yet? I don't see it.
It's a shortcut way of seeing market sentiment, and if you can see them both separately, it makes seeing the chart earlier. I'm going to go a little overtime, guys. Stick with me, because I've got more. I'm like a salesman. I'm a filthy salesman. I've got more. Okay, and the more that I have here, just keep an eye on our background. You know, it's looking good. It's looking good. Seasonal plays, John. Right? Season acts here. If you have a look, Euro British pound over the past 24 years, we have seen weakness in late October. We have seen lateness, right? Pretty good win rate. That's a 79%-ish win rate, which is interesting. 0.9% downfall. But you want to make this even sexier.
Yeah, I do.
Even sexier. This year has been a bearish year for Euro Great British Pound. So let's have a look at this past 24 years. What's happened when we just look at the bearish years, right? If I go ahead and do that, the downfall extends into late November with an 84% hit rate and an average return of -2%. What we've currently moved so far is simply 0.6%, which means I've got another 1.4% in a seasonal play to capture here on Euro Great British Pound to get through this level, and the macro backing it up. Come on. I just made myself full screen, but come on. Show me the money. Guys, there's your Friday Big Bite. I hope you enjoyed it. Thank you so much for being here and supporting Market Wake Up. We thoroughly enjoyed doing this, and we hope you guys enjoy it too. We're going to be back next week to do it all again, 8:30 a.m. British Standard Time, Monday to Friday. Show us some love if you do enjoy it. Share it with your friends so we can keep this train going. And John, have a fantastic weekend.
You too, mate. Peace.
Cheers.